pleasure to be here to give you the story of Ariana Resources. We've been operating in Turkey for well over 10 years now, focused exclusively on Turkey, in particular Western Turkey, and I'll talk about our primary project there that we refer to as Red Rabbit, and also in northeastern Turkey in joint venture with Eldorado Gold Corporation. We've gone through the disclaimer, so I don't need to dwell on that. So we are an AIM-listed company, been listed on AIM since July 2005. We've been focused on Turkey for a number of good reasons, but primarily because it's geologically highly prospective, and I'll talk about that in further detail. Also, Turkey's introduced a number of changes to its mining code over the last 10 years or so. We've just gone through the latest change back in February. We've also got a very supportive tax regime, and we've been very lucky to now have been awarded strategic investment status by the Turkish government. Over the 10 years, we've built up an extensive management team that's highly experienced in this sector. So I can broadly divide up the key focus areas for the company into these three blocks. Development with planned production in 2016, currently targeting early second half of next year for first gold pour. It's fully funded. That's partly by our project partners, Prosia, but in addition to that, through a bank facility that we've got in Turkey. Then over in northeastern Turkey, we've established over a 1 million ounce resource with Eldorado. We have 49% of that joint venture, and that also is a fully funded joint venture. In addition to that, we run our own exploration projects outside of those joint ventures, and we're continuing to work on those areas. Most of them are focused around the Red Rabbit project area in western Turkey. A quick snapshot of some key market data there. Important shareholders, Lanstead, the largest shareholder. Other important shareholders, Eldorado Gold Corporation, Bruce Rowan, Starvest, all of these have been with us now for many years. 2007, 2008, they've remained shareholders. Market capitalization up a little bit today, so it should be about 9, I guess, now. Shares in issue, 683 million. This spike that you see in the share price graph there in recent times, that relates to the news following the receipt of our forestry approvals for our Red Rabbit project. And that enables us now to move into the construction phase of that joint venture. Background on the management. Michael de Villiers joins me today. He's at the back of the room there. He'll take questions later. Unfortunately, I've got to depart as soon as I finish this presentation. I've got a very early morning flight out to Turkey tomorrow. So I'll take questions afterwards, obviously, but then any others that you can ask of Michael later on. Michael's background is in accountancy, but he's been involved in the mining industry for much of his career in Africa, Central Asia, and Europe. My background, I'm a geologist, Turkish background in fact, so I do speak the language. My experience has been entirely in gold exploration, gold mining, 17 years experience in total. I'm also a director, in addition to Ariana, of Royal Road Minerals, which is a company that came out of the Ariana stable and listed on TSXV in April of this year. William Payne, also an accountant, handles the back office function with his team on the accounting side for the company. So why Turkey? Turkey is situated fairly centrally within what we refer to as the Tethyan metallogenic belt. So this broad region through here that ends up going through Iran and out to Afghanistan and so on. There are a number of major metal deposits through this region, in particular copper gold, but all manner of other deposit types. Obviously, our focus is on the gold provinces of Turkey. There are 3 broad provinces in western Turkey, Central Anatolides and the Pontides belt through here. Turkey has proven itself as a very important destination for gold exploration and mining, particularly in the last 10 years. As soon as the Ovacık mine went operational in 2001, and that project had cleared the various environmental hurdles that it needed to achieve, we've seen a number of other mines come on stream over the course of the last 10 years, and we've seen that Turkish gold production ramp right up. The slight drop that we see just last year relates to the closure of 2 old mines, but we're actually expecting another couple of mines to come fully on stream later this year. That's Kaimaz and Himmetdere given down there. So zooming in a little bit into the areas that we're operating in. This is what we call the Western Anatolian Volcanic and Extensional Province in Western Turkey, within which sits our Red Rabbit project, so areas 1 and 2. We have our individual exploration, so 100% owned licenses sitting outside of that, 5, 3 and 4. Area 6 is the joint venture with Eldorado Gold Corporation, and the points shown at 7 relate to Royal Road Minerals. We retain 2.5% of Royal Road. So I'll spend most of this talk on Red Rabbit, our primary project in Western Turkey. It's an interesting shot taken up against some old workings containing very high-grade silver here. You can see in the background there, that's the general lay of the land, mainly agricultural, a little bit of forestry. So our Red Rabbit joint venture is currently 30% owned by our project partners, Presea. Presea are a general construction firm, but with a specialisation in gold and silver processing plant EPCM. The photograph in the background here is the ADR circuit on the Kışladağ mine. So this is Europe's largest gold mine, in fact. And they were responsible for the installation of that particular part of the plant. They've also been involved in a number of other plant builds elsewhere within Turkey and also within the region. So an extremely experienced, capable partner, and we're very lucky to be working with them. Presea has funded our definitive feasibility study and EIA during the course of the last couple of years, total expenditure of $3.5 million. They are now funding the construction phase of the project. They have a further $4.5 million to spend before they ultimately earn into 50% of the joint venture. So it's fully funded by our partners Presea. In addition to that, we have a separate credit facility with the Turkish bank, Türkiye Finans Bankası, for a further $33 million total facility. I briefly mentioned the strategic investment status that had been granted to us by the Turkish government. There are a number of incentives that we applied for. We got all of them. Most important is a reduction in corporation tax from headline 20% rate to 2% in the early years of production, and that will run for about three years or so. In addition to that, the Turkish government will fund the employer's share of all social insurance contributions for 7 years of mine life for all mine employees. So that's a serious further investment incentive. There are some other incentives built in, including a VAT exemption and also customs duty exemptions for those components that we're importing from outside of Turkey. So in terms of significant milestones, I've briefly gone through the DFS EIA. We completed those during the course of 2013. So in that sense, the project is completely technically de-risked and indeed environmentally de-risked. We also secured an extension on our key mining license and mining permit for gold and silver for a further 20 years. So that enables us to mine any time within that period of the next 20 years, before we need to then go to another renewal if indeed we've found further resources and the mine's still going. One of the key hurdles that we needed to achieve was that forestry permit, and I'll go on to talk about the significance of that in a later slide. But the other aspect of surface rights that we needed to de-risk are the freehold land. It's a patchwork of freehold land over the top of the project in places, and we're going through a process of acquiring all of that land now. We have actually acquired 100% of the land in the primary reserve area. This is a snapshot of the DFS results. So 8-year mine life total. Cash costs are low. This is normal for Turkey. Turkey is a low-cost jurisdiction for gold and silver mining. We'll be using a very conventional circuit, somewhat of a hybrid between carbon in column, carbon in leach. It enables us to process a variety of ore types, including variations in the gold and silver ratio, because this is a silver and gold mine. In fact, in terms of metal output, there's more silver coming out than gold. Importantly, the tailings storage facility, we've got a 15-year design life on that. And the reason for that is twofold. One is because we're fully expecting to find additional resources in the immediate vicinity to increase that mine life from 8 years to 10 plus, but also because of certain Turkish environmental requirements that require a larger than project requirement for the tailings facility. The in-pit grade is good, just over 3 grams per tonne of gold and just under 40 grams per tonne of silver. So that's high by, again, international standards for an open pit. So there's a quick summary of the financial model, varied -30 to +30. We ran the base case at that time. This was in midway through 2013 at the higher gold price of 1,300 or so. But you can see that it's robust across that range, with cash costs varying with gold input cost in the $600 per ounce range. One important point about this is that the model was established when the oil price was at over $100 a barrel. So we're factoring in here higher mining contractor costs than we'd get today. So we're in the process now of revising those mining contractor costs. We expect to see some reductions, some savings there. We're also modelling the impact of the investment incentives and other aspects of cost reduction that we're introducing into the EPCM. That I should also point out that the cash cost is already inclusive of the royalties. There's a private royalty of 2.5% NSR, net smelter return, payable to Franco-Nevada, as well as the new Turkish royalty rate. So the current project has an 8-year mine life. We fully expect to add to that mine life, and we're going to do it from these areas. So this is Kızıltepe. I should say this is a cross-section, sort of a geological cartoon cross-section of the area through the Red Rabbit project, starting at Kızıltepe down here, all the way out to the Tavşan sector over here. Kızıltepe will be the location of the first mine, and we expect to add resources both at Kızıltepe, but also these satellite prospects all the way out to Kızılçukur over here. All of these are within truckable range, potential truckable range to Kızıltepe. So any resources that we find in here, we just immediately add to the resource and then ultimately to the reserve base. These bar charts or columns split up the current inferred, indicated, measured resources as we see them today. But we've also given a rough indication of what we think the potential might be if we go on to fully drill test some of these other areas at the individual prospects as we understand it today. Prospects such as Karakavak and Yukarıçamlı we haven't even drill tested yet, so we don't know what will come out of there, but I fully expect to start adding some resources there as well. Once we've got the Kızıltepe sector up and running, producing at a rate of about 20,000 ounces a year, within a few years, partly funded out of cash flow, we expect to bring the Tavşan project on stream. Tavşan has the capacity to be operated at 30,000 ounces per annum, so ultimately, within a few years' time, we expect to be producing from both sectors at a combined 50,000 ounce per annum rate. Now, you may not see, some people might not see all the detail on these slides. We have got printed copies of this presentation outside, so you can have a closer look then. But the main point is that this is a satellite image over the Kızıltepe mine site area. That's a satellite image over the Tavşan mine site area. All these dark blue lines are the vein systems that we've been drill testing. Primary reserve there at Arzu South, with satellite reserves at Arzu North, Derya and Banu. So all of these will be mined in turn sequentially once we've finished mining at Arzu South. Arzu South has a 5-year life, and then we move on to the satellite pits. The forestry permit that I was telling you about related to the process plant site, which is, as you can see, partly within this forested area here, part of the tailings storage facility in here, and the waste rock dump over there. So we've now got the forestry permit approval for those, which enables us to move into the construction stage of the project. The patchwork of land that you can see around here is the freehold land. So the land that we've already purchased relates to the Arzu South area, and our partners, Prosia, are fully funding all the other land purchases related to the pipeline out to the tailings dam and the tailings dam itself. So that's Kızıltepe. Looking over at the Tavşan sector, Tavşan is Somewhat similar geology. It's also what we refer to as a low sulfidation epithermal gold-silver system. But instead of steeply dipping veins, we've got a gently dipping, almost flat-lying ore body sitting at the top of a hill. Lower grade, about 1.5 grams per tonne, but we understand, based on the test work that we've undertaken, that it will be heap leachable, very amenable to heap leaching. And the intention ultimately would be to establish a small heap leach facility here with the processing of the loaded carbon occurring at our plant here at Kızıltepe. So we'll be trucking that loaded carbon between the two sites. And that saves on capital costs and so on. There are efficiencies in that. So one area that we want to explore immediately is actually located along strike of the existing vein systems at Arzu South and Arzu North. So this is a long section through that vein system. This black line here is the designed pit seen in cross-section at those two locations. The purple blobs represent high grades of gold with thick intercepts. So it was the best quality of ore, if you like. One thing that we want to do is systematically test down plunge of the high-grade chutes down here, because a lot of the drilling that we've undertaken to date related only to the top 100 metres. We only wanted to understand what was immediately open pittable. But as we develop our mining plan for the future, we want to look at what the longer-term underground potential may be. So we certainly need to test those areas. So that all those X's shown here relate to planned holes. These are not being drilled. We also want to test this zone between Arzu South and Arzu North. We've got a clear indication that that vein system continues under there from a number of geological and geophysical indicators. And also we drilled 2 holes from here targeting that mineralization down here, and we intercepted this purple blob down there. So that's a clear indication that that vein system continues in this direction. And again, we want to test down plunge of that high-grade chute. But there alone, we have the potential to add another perhaps 100,000 ounces to our resource base, which we could immediately tag on to the end of mine life. Okay, so moving on now to the Eldorado Gold joint venture in northeastern Turkey. You can see the terrain is very different to the slide that I showed on Red Rabbit. Very mountainous, alpine terrain, highly forested, as you can see here. This photograph's taken from the top of the hill where we made the discovery of the Sullenbaş ore body, and that Sullenbaş ore body comes down the hill, subparallel to the topographic surface, and eventually joins up with the Ardalı copper gold porphyry, which is what got us interested in this area in the first place. And the porphyry sits down here in the valley. So that photograph was taken from up here, looking back down the valley here to the porphyry shown in red. And the Sullenbaş ore body is that yellow blob sitting within the design pit there. So our partners, Eldorado, have funded all work on the joint venture to date. They've spent about $8 million so far. They are committed to continue funding further work on that. We're very pleased to have established a combined resource of both Sullenbaş and Ardalı of over 1 million ounces gold, and there's certainly scope to continue growing that resource base as we continue drill testing that. We have taken a decision jointly with Eldorado to explore opportunities to now sell this project on. There are a number of, we received some interest from a number of Turkish groups, primarily out of the construction sector, looking to get into gold mining in particular. And with that end in mind, we decided that we needed to complete a scoping study based on the results of all the exploration work to date, so we could at least benchmark the value of this project before we entered any serious negotiations. So the results of that work were very pleasing, establishing an NPV at 8% discount of $108 million, with good internal rate of return, and certainly showing some good figures up here, 10-year mine life, again, relatively low cash costs, and so on, and a good potential production rate of 50,000 ounces per annum. So that's something that we're continuing to work on with Eldorado. So in terms of valuation that we might attach to a project like Sullenbaş and Ardalı, one thing that we thought would be worthwhile is looking at comparable transactions. So these are project sales that have occurred in Turkey over the last 10 years. Most of those have been completed in terms of cash. There's only one that related to a part share transaction, and that's that one. But going back to Ovacık, which was the first in 2003, that had an in situ resource valuation of about $60 per ounce. Run that forward through the years, we end up with the last project transaction of Kestanelik, sale by Tigris Resources of Australia to Nurol Holdings in Turkey. That's very close to that average value there of $53 per ounce. So the point to take away is that Turkish resource ounces are valued highly by the Turkish market, not necessarily by the international market, but certainly by the Turkish market, and that's something that we want to continue to explore. So just quickly to summarise before going into questions quickly, targeting gold production as a company in the early second half of next year. We'll be producing ultimately at a rate of about 20,000 ounces per annum through ultimately 8 years of initial mine life, but with plenty of potential to continue adding to that resource base in the future. We also have the Tavşan sector that has the potential in a couple of years' time to be developed into a separate heap leach opportunity, producing at 30,000 ounces per annum. So ultimately targeting that 50,000 ounce per annum rate. Of course, we're going to continue exploration. We are ultimately an exploration company, both within the Red Rabbit joint venture, but also in the vicinity and indeed elsewhere in Turkey. We have access to the Newmont database, 20 years of exploration data covering the entire country, so we know exactly where we want to go next. And perhaps to finish up, a very important point to take away, and it's important to benchmark companies against the all-in cost of discovery. And our all-in cost of discovery is $22 per ounce in the ground. That's including our corporate spend. And that relates to an overall average, global average, that's these days running at about $40 per ounce. So we're certainly, in terms of benchmark, that's a great place to be, half the international norm. So thank you very much. Thanks for your time.
Super. Do we have any questions from anybody, please? I'll kick off if I may. You're at the stage now where you said you'd bought the land around the resource, and then you're now acquiring the land for the construction site. Is that correct?
Yes, so part of it has already been acquired for other infrastructure areas, but our partners, Presea, are continuing to acquire further land.
And who are you acquiring it from? Who are the current owners?
So they're locals. We've got a couple of villages that sit adjacent to the project, or within. Actually, I'll quickly go back to that slide because it's worth. Can I go back on this? Can I go back?
In one moment.
Yep. So there are a couple of villages that sit not too far from the main project development location. So there's one that you can make out just over here. There's another one that sits off the map just up here. The population down here is about 100 people. Up here, it's more like 600 people. So it's the locals that own that land. And back in 2011, we negotiated with a large group of the local community to try and fix a price that they were all happy to sell at, that we were happy to buy at, because we didn't want to be in a situation where that price would change with time. And so far, so good. We've stuck to that price from 2011 to today. And the locals are continuing to liaise with us very effectively, and our partners, Presea, are seeing a lot of success with further land acquisitions now. And
so the current land usage, is it agricultural or
is it agricultural? It's agricultural, but it's second-degree agricultural land in the main. Tobacco is the main cash crop. There's some barley, but it's not high-quality land, not designated as such by the Turkish government.
And my final question on the kind of the construction element to it, you said that you're fully funded through your partner Presea. Does the money come to you and then you spend it, or do they directly take responsibility for commissioning and purchasing the different elements that you need? Yeah,
so two levels to that. Presea are funding the joint venture entity that we refer to as Zenit Madencilik, and that's by direct cash injection into that venture. Every March, April, we then adjust their shareholding within the joint venture company based on the amount that they've spent. So they can only reach a limit of $8 million total spend before they earn 50% of the project. So they're still earning in on that, with that remaining $4.5 million to spend. The facility that we have with Türkiye Finans Bankası, that works by our application to them to pay the suppliers directly. So if there's I don't know, we're going to be buying a ball mill soon. That order goes in, made by us, but paid for directly by the bank to the ball mill provider. That's...
So I guess what I'm asking indirectly is you're in control of that process. You're able to, if you need to spend some money, you're able to do. So you're not waiting for someone else to clear funds or transfer.
No,
it's all available.
It's available, being managed by the joint venture company itself, the joint venture board, plus its management team.
Super.
Yeah.
Do you have any questions? Question here?
Do you ever get any objection from locals or environmentalists trying to stop your project because you are maybe ruining the land? Or
No. We've gone through the environmental impact assessment process during the course of 2012 and 13. During 2013, we held public consultation meetings. The last important meeting was attended widely by representatives of the local community in that village that sits up here, so the larger of the two villages. Representatives from the Ministry of the Environment came from Ankara. We had support from our environmental consultants, plus local important community members, the mayor, the governor, and so on. And that meeting went extremely well. So we had no objections, and in fact, we sort of passed with flying colours.
That's good.
Any
Thank
other
you.
questions? I was going to ask, with the facility you've got from the bank, is that specifically for the Red Rabbit project, or are you also able to use that facility to further develop anything else within the portfolio?
No, it's specific to the Kızıltepe sector of Red Rabbit. So it's enough capital to get us through the construction stage and into commissioning.
So you can't get tempted to go and spend it on exploration somewhere?
No, I don't think the bank would fund exploration.
And my other final question, I know that at current gold price, when you're in production, you have a profitable proposition, and everyone's got an opinion on kind of long-term gold. We've got people who, like Richard Poulden, who says $5,000 an ounce, which I think might be quite extreme. But where do you see, if you have a life of mine the next 10 years, roughly, do you think we're stable? Do you see a long-term growth? What's your view?
I think it's really very difficult to predict these things, and you said yourself, past performance is no clear indication of future performance. I think, given the all-in sustaining cost is north of $1,000 an ounce in many cases internationally, it would be interesting to see the gold price drop beneath that floor for too long, because the industry would be on its knees, and it would ultimately lead to a further recovery in price. Where we are currently is comfortable. It'd be nice if we were a little bit higher, but 1,200, 1,250, our project works at that level, and certainly operating in Turkey, it's not a problem at that level.
Okay. Before we finish, any other final questions from the floor? Gentleman over here.
Are there any problems with infrastructure or resources or electricity or water or transport?
Not at all, not at all. So that's something that I haven't covered, so apologies for that. In terms of infrastructure, and again, you won't be able to see too clearly from the back there, but we've got an asphalt road connecting two towns that runs through the project here. We've got two electricity cables that run across the project here, so we can tap straight into grid power. Water is no problem. Boreholes, or the testing for the feasibility study, have shown that we've got plenty of water, groundwater, to supply the plant and our processing requirements. labour, we've got these villages. We've got some very skilled people in some of these villages. We've worked with a number of them over the years, so we know they're very capable, very hands-on, applied sort of people that are keen to work. So we'll ultimately be employing about 100 local people when the mine's up and running. I don't think there's any issue in that regard.
This might sound incredibly ignorant, but in terms of continuous and consistent power supply, will you, from the grid, that's sufficient? You won't have any capacity issues? Or
No capacity issues. Grid power in Turkey is relatively cheap, 11 US cents per kilowatt hour. We'd lock that price in for a duration. So I don't see any issues there. There's also potential down the line to potentially tap into a hydroelectric facility nearby, and we've looked at that. If we want to make the mine a little bit greener, that's something that we could look at downstream.
okay. Well, that's it.